do? What's happening? You are now tuned in, ear to the streets, February 9th. Let's get to it. Let's talk Tesla and Bitcoin. And more specifically, Tesla's move to buy $1.5 billion worth of the cryptocurrency, a move that sent it to record highs above 44 bands. Now, on Tesla's end, this is a pretty big move because the $1.5 billion they spent was a pretty decent amount of their cash. At the end of 2020, they had $19 billion in cash on hand, which is more than $13 billion than they had at the end of 2019. And the reason they had this much cash on hand has just about as much to do with their actual business as Quinn Cook had to do with the Lakers' last championship run. The pandemic created a lot of first-time investors, and a lot of these people flocked to Tesla, which caused the stock price to skyrocket. This time last year, Tesla stock was around $150. As of yesterday, it hit a high of about $860. That's a 570% increase. And unlike this motherfucker,
where am I?
You're behind the couch.
What?
Tesla ain't no dummy, and they made sure to cash in on this rally. In September, they sold $5 billion worth of stocks. The rally kept going, so they said, shit, let's run that back. And in December, they sold $5 more billion worth of stocks. That's half the reason they could afford to spend $1.5 billion on Bitcoin. Now, companies that buy Bitcoin face an interesting dilemma, because although Bitcoin is supposed to be a currency, they have to consider it an intangible asset. And I know you're thinking, what the fuck does that even mean? So here's a quick refresher. Assets are really anything with valuable. Intangible assets are anything that you can physically see or touch. Cash, cars, machinery, buildings, all that. If you can see it or touch it, it's tangible. Now, intangible assets are ones that have value, but you can't see or touch them. Trademarks, patents, brand recognition, all that type shit. And this is important for one reason. With intangible assets, if it decreases in value, you have to subtract that from your company's earnings. And if it increases in value, you can't add it to your earnings unless you sell it. Shit's a little tricky. Let's take a look at this example. A company named MicroStrategy bought 425 M's worth of Bitcoin last summer. And although they made millions, unfortunately for them, when it was time to report their earnings, the price of Bitcoin had dropped. That 425 M's they had was now only worth 380 M's. So instead of being able to report the $30 million in profit they had to report a $14 million loss. Because of this and the overall volatility of cryptocurrency, it comes with extra risk. But scared money don't make no money. And if Bitcoin continues on the path it's going now, Tesla might make more from that than them damn cars they making. Especially when you consider that 2020 was the first year that Tesla ever made a profit. Picture this. Had Tesla invested at $1.5 billion this time last year, they'd have over $8.5 billion right now. But this is only half the equation. Tune in tomorrow and let's talk about what this means from a consumer side. I'm gonna keep my ear to the streets. See y'all tomorrow.